Hey everyone, how are you doing today? Man, we are so lucky to have Matt the Mortgage Guy on. CPI came in hot. We just did a video talking about his business. You like it, lock it. Love that statement. Let's welcome Matt the Mortgage Guy. How you doing, buddy?
I'm doing great, Mike.
Hey, I'm so lucky to have you today. So you don't know this, but I talked to Anna Kelly before our interviews, and one of the discussions with Anna today was inflation. She and I are investors. We both did kind of the small residential. She's gone on to much, much bigger things while I've stayed kind of small. But the first thing we talked about today was inflation, right? Does inflation change our decisions? And obviously in the commercial market, they have interest rate risk, right? Their terms are typically locked for 5 and, all of these different things. But you're a residential guy. I'm mainly a residential guy, meaning 4 units and below. I'm curious, when you look at your interest rates and really what your customers are paying, I have to assume, as we ended video 1, rates will be higher at the end of this year. Rates will be higher next summer. We've kind of, I don't know if, I think we've seen the bottom. I think we're on the uptrend, and that's going to change behaviors. But I wanted to get your opinion.
Right. Yeah. I mean, we talked about it briefly where 2.75 to 3.25, I didn't see a lot of change in, consumer behavior, buyer sentiment, all that stuff. But over time, we'll see once we let it sink in.
Right.
Because for me, in my world, everything's based on payment. And I talked to somebody recently that, they were going to buy in 2018 and they didn't. And now they're back in the market. And they were telling me some of the things they were thinking about back then. And, they thought it was high and they thought that it was unaffordable. And so they backed out and they waited 3 years later and now it's more expensive. But really, from a mortgage payment perspective,
not really.
There's not a big difference, 2.85 at 550,000 versus maybe they could have got it 475, but they were going to pay 3.99 or something.
Yeah, that's what people need to realize. There's so much about this business that's payment. I mean, people look at charts and all these gurus, not all of them, many of them point at charts and go, oh, look, 2008 peak, 2021. Wow. Well, the payment, interest rate was, 6.25 and, now it's 2.75. It's vastly different payment.
Right. And so I think that is the most important piece in my world. And literally the pre-approval process is, let's see not what you qualify for, but what you've told me is a comfortable mortgage payment. Let's back into that. And now we're looking 500, 525 and 550 and 5% down. These are random numbers. So don't take these but 2,200, 2,300, 2,400. And then you figure out what you're going to buy based on that. The 500 to 550 almost doesn't matter. It's just, how do I get to my $2,200 to $2,400 payment? I've paid this much in rent. I know what I can afford. I know what my income is. I know what me and my family are comfortable with. And this is our budget. So let's back into that. So really, sometimes you can cover up that purchase price. The purchase price you just take to the realtor and say, find me what I'm looking for in this price range, because this is the mortgage payment I'm looking for. So I think that's, we started this episode with talking interest rates. Fannie, Freddie, Mortgage Bankers Association, everybody's in agreement. Rates are going up. Rates are going to be, somewhere in the 3.25 to 3.75. Most of them land 3.4, 3.5 by the end of 21. And then 22, I think the forecast may differ, but my thought is 3.5 at the end of this year and between 3.5 and 4 in 2022. And it's just going to change that equation. And it's just going to be, you were looking from this price range to this price range at this rate. Now you're going to be looking from here to here. And who knows what'll happen with home prices. I really think that the effect that rates will have, and everyone's talking about, well, demand will decrease as rates go up. Sure, a little bit. But if you pump the brakes on something that's going 100 miles an hour, you're still going 50, right? So anybody who's dreaming about a 20% discount is out of their mind. When I put guesstimates out there for home price appreciation, it's like, maybe we go from 10 to 7 and then 4. 2023, we're 4% appreciated, but it's not getting cheaper. If you think it's getting cheaper, you can crap in one hand and hope in the other and see which one fills up first.
Yeah, I just hope people hear that. So there's a couple of things around interest rates. I think we've been unnaturally low because there's this statement, right? For every 1% rise in interest rate, housing falls 10%. Historically speaking, you could do the math formula and it's close enough to be a rule of thumb. But I generally feel that once we got rates under 4%, it's all been unnatural. So I think a move from 2.75 to 4 doesn't really slow anything down. The demand supply equation is so out of whack that even if we remove 25% of the demand, it's still a seller's market. It's still wacky. Right. But you go from 4 to 5%, you're going to feel that, right? So the total move is 275 to 5. That'll hurt, right? And I don't hear you saying 5% on the radar anytime
Yeah,
soon.
I don't think so. Yeah. And the thing about it is the people that are getting pre-approved, the people that are willing to offer 50, 60,000 above list, I really don't think 2,900 to 3,100 payment affects them that much.
Yeah.
And you know, we see inflation, we see rents going up, we see people's incomes are going up too.
Yeah.
As much as the doomsdayers can manipulate data how they will,
Yeah.
you know, the truth is that things are getting more expensive, rent's getting more expensive. So, you know, you're going to have the same options you have today, where do you want to pay $2,600 in rent, or do you want to pay $2,600 in a mortgage? And as those rents go up and maybe rates go up, so the mortgage ticks up a little bit, they're probably going to still, you know, be the same type of discussion.
Yeah. And I love the fact that you started this video around just, it's a payment discussion. I hope most mortgage lenders, and I hope all buyers are thinking that way. My conversations with them, they're all talking price. Price is this, price is this, price is that. What's the payment? What's your payment, right? Are you a, you know, 800 credit score and 20% down? Or are you a 680 with 5% down? Because I guarantee you your payments are different.
Right.
Tell me about
and I try to dig that out of somebody before we do the pre-approval, so I know what their target is, and so they know what it is before I tell them. Because for whatever reason, it's been a thing. What is the max I'm pre-approved for?
Yeah.
And they've been used to, like, what's my max ticket? And I literally don't tell people unless they ask.
It's such a bad question.
I send folks, you know, based on your goal of buying something in the 550 range, here's what I've sent you. And I can look at it and know, like, this person could buy up to 800,000, but I'm not going to say it. It just doesn't even, it's not even worth planting that idea.
Yeah.
I know what their budget is. I know what they're looking for. And let's show them 525, 550, and 575. That's where the payment lands, where they're comfortable.
Mhm.
And then we can adjust from there. When they call me and say, Matt, I really, really like this place at 625. Do I qualify? Yes. Here's what the payment looks like. Because all too often, I mean, I literally had this yesterday, Mike. A realtor calls me, sorry to put a rush on this. Client wants to see this house. Clients really wants to make it happen without selling their old house. So they're only going to be able to put 5% down. What's it going to look like? And you know, I've looked at enough things. I know enough about finance. I got a finance degree where, you know, somebody who's making low six figures walking into a $4,000 a month mortgage payment is just, it doesn't sit right with me. And so my first thing I said to this person is, you know, we've got your stuff, we can look into it, but just so you know, I did some quick math: principal, interest, taxes, insurance, mortgage insurance, 5% down, this loan, it's going to be about $4,100 a month. And I just wanted to get that out of the way so that maybe they go, you know what? Not a good idea. Because then it's not, do I qualify? It's like, is this a good decision?
That's I mean, let's just say you make six figures and you're going to do 50K in mortgages paid after taxes. 6 figures is gross. I mean, that's a recipe for a problem. That's what that is. Yeah.
Right. Yeah.
Yeah. So folks, if you want the honest answer about what you can buy and afford, and you're in California, or you want to do a refinance, you need to reach out to Matt, the mortgage guy. That's why he's my Wednesday expert. How do you want them to do that?
Email's best, matt@mattthemortgageguy.com. My office manager, Jen, is great. And she'll, you know, either put you on my calendar or figure out if we can answer the question via email. Like you said, Mike, folks are going to call me. Sometimes I'm the in-between call. I don't give you the answer you like and you call somebody else until you get the answer you like. That's fine. I'm just going to give you the honest truth.
Yeah.
And I'm just going to tell you what helps me sleep at night. And for some people, it's awesome. Now's not the right time, whether that's, you know, increasing your credit, whether that's putting more down, whatever it is. Right. But I'm giving honest answers that I feel good about when I, you know, head hits the pillow at night. I feel like I serve people.
There you go. I love that. And folks, if you missed his email, you go ahead and look at the description below. I've taken the last week or so to completely change my descriptions. Now we have all my guests have playlists and they have their emails. And if you want to get all that, look at the description below. Thanks, buddy.
Cool. Stepping your game up. I like it, Mike. Good work.